All right, let's just jump right in. We're going to talk about three huge forces that on the surface seem to have nothing to do with each other. But they're all colliding right now in 2026 and creating this really unique, powerful opportunity. And we're talking about AI, crypto, and, believe it or not, tariffs.
It really sounds like the start of a bad joke, doesn't it? An AI company going public, Bitcoin getting the official stamp of approval, and a global trade war. What could they possibly have in common? Well, as it turns out, they are all different pieces of the same puzzle. And the answer might just be your next big break.
So here's how we're going to unpack this. First, we'll look at the absolute frenzy happening in the AI capital race. Then, we'll jump over to crypto's new official status. After that, we'll uncover why software is this amazing safe haven right now. And then, we'll put it all together and give you a straight-up action plan for 2026.
Okay, first up, the AI capital race. And look, this isn't just about who has the coolest new tech. This is a flat-out war for dominance in a market that's heading towards $500 billion. That's trillion with a T.
And if you want to understand the speed of this thing, just look at Anthropic's valuation. I mean, this is insane. It rockets from about $60 billion to a target of $350 billion in less than a single year. That's not just growth. That's a signal of absolutely crushing pressure to go public, to get onto the stock market and lock down their spot.
Now, when you put them side by side with OpenAI, you see something really interesting. Yeah, OpenAI might have the bigger name, but Anthropic has a secret weapon for Wall Street. 80% of their money comes from big business clients. That's the kind of predictable, stable income that investors drool over, and it makes them, arguably, much more ready for an IPO.
And that investor excitement translates directly into this number, a target valuation that's 13.5 times their revenue. I mean, to put that in perspective, your average software company is lucky to get a multiple between 5 and 8. The market is putting a massive, massive premium on the companies that are building the very foundations of AI.
But, okay, so what does all this Wall Street maneuvering mean for you, the person actually building things? Well, it all boils down to one simple critical question. What is going to happen to the price of your API calls? You know, the money you pay every single time your app talks to their AI once the pressure to make shareholders happy really kicks in. All right, let's shift gears to our second major change, and you'll see how these start to connect. Crypto is finally growing up. The whole Wild West era of, is it legal, is it not? Well, in the US, that's officially over. You're going to want to remember this date, March 17th, 2026. This is the day the SEC and the CFTC, the two big financial regulators, finally got together and laid down the law. They officially classified 16 major crypto assets as digital commodities. Just like that, years and years of legal fog just evaporated. The one thing that kept the big institutional money on the sidelines, that endless "is it a security" debate, it's over.
And the list they came up with is, well, it's fascinating. You've got the usual suspects, right? Bitcoin, Ethereum, Solana. But then look closer. They included Dogecoin and Shiba Inu. I mean, wow. That tells you the regulators are looking at what people are actually using in trading, not just how serious the project's white paper sounds. And here's the proof that all of this really matters. This isn't just theory. The money is pouring in right now. Look at this. The Bitwise XRP ETF is seeing over $8 million in new money every single day. That regulatory clarity was the green light the big money was waiting for.
Okay, now for our third piece of the puzzle, and this one might be the most surprising. We're calling it the software safe haven. Because in a world of growing trade wars and tariffs, writing code has become a kind of superpower.
The whole idea is actually incredibly simple. You can't put a 25% tax on a packet of data crossing the internet. While physical things like cars and steel get hit with these huge taxes at the border, software just flows right through, untouched.
And this table just lays it out so clearly. If you're making hardware, tariffs can be absolutely destructive to your business. Even cloud providers take a hit because all their servers get more expensive. But pure software, delivered digitally, the impact on your profit margins is practically zero. It is a uniquely protected business model for the world we live in today.
And this whole global trade situation, it creates a direct financial win for a lot of people. If you're a developer earning in US dollars but living somewhere else, the strong dollar is a massive tailwind. This exchange rate right here, it represents a 7.7% automatic pay raise on every single dollar you earned compared to last year, just because of how currencies have moved.
So let's recap. We've got this frantic race in AI, We've got crypto markets that are finally stable and regulated, and we have a global trade mass that actually helps people who sell digital goods. So, now it's time to connect the dots.
This, right here, this is the core equation for 2026. You've got access to these unbelievably powerful AI tools. You've got newly stable crypto markets you can use for payments or investment, and you can wrap all of that up in a software business that is basically immune to the biggest economic headache in the world right now. These three things create a perfect storm of opportunity.
Now, understanding the opportunity is one thing, but actually grabbing it is something else entirely. So let's get super practical. Here's a clear blueprint for how to position yourself to win in this new landscape.
First things first, get ruthless about optimizing your AI costs right now. Second, do not get locked into one API provider. Integrate a cheaper alternative, something like DeepSeek, as a backup plan. Third, with the new rules, it is absolutely time to reevaluate crypto's role in your strategy. And finally, do everything you can to earn in US dollars to ride that currency wave.
And what's great is that this strategy is tough. It works across different possible futures. In the best case scenario, your costs drop and your assets grow. In the most likely scenario, you keep your costs in check while your dollar earnings give you a nice boost. And here's the key part. Even in the worst case scenario, your dollar earning software business is still the ultimate safe place to be.
So if you take one thing away, it's this. The single biggest risk you need to manage, the thing you have to prepare for, is the very real possibility that these big AI companies will hike their API prices after they go public. They'll have shareholders to please. You have to hedge against that.
And really, it all just comes back to this. The way AI has matured, the way crypto is now regulated, and the way trade wars work, it is all converged to make software the safest, most profitable place to be. I don't think there has ever been a better time to be a builder creating digital products for a global market.
So, the trends are crystal clear, and the playbook is right in front of you. The only question left is, what are you going to do about it? How are you going to use this unique moment to your advantage?